So I think you can start. Does your microphone working?
Great. Thank you for the intro. Dubious honor of being the last talk between you guys and the end of the conference on a Friday night. So we'll try and keep it interesting, keep the pace moving. So I'm Martin Macmillan. I'm the founder and CEO of Pollen VC, based in London. We provide credit facilities to gaming studios to help them scale. So I'm going to be moderating today, so we're going to have a sort of fairly wide-reaching investment panel. So we've got some great guys who I'm going to let introduce themselves. So we're going to move the conversation around quite a lot, and hopefully we'll have a few minutes for a bit of Q&A towards the end. So I'm going to sit down, hand over to Kai to introduce himself. We'll do a couple of minutes of intros, and then we'll get into first questions.
Hello, everybody. My name is Kai. I am currently serving here as the managing partner of the Riyadh Angel Syndicate. We are an angel investment syndicate based in Riyadh and Dubai. Founded about a year and a half ago. So far we did 3 investments, ticket range anywhere between $50,000 to $100,000 for the deal of the century, maybe more. Haven't seen it yet. Last investment we did was Layer AI last year. Very happy with that team. And always open to hearing about startups raising funding.
Hello, my name is İlker. I'm the head of studio at Quiet. We're a French-based company, and we're different a bit from traditional investors, where we are buying games rather than investing in companies. And yeah, we've been in operation for about 2-3 years now, and we've bought so many games and apps. And I'm just going to talk about some alternative fundraising methods. Thanks.
Hello everyone, I'm Emre Kesti from We Play Ventures. I'm working on 2 years. It's been 2 years. As We Play Ventures, we are focused to early pre-seed and seed stage studios in Europe, Central Asia, and Turkey. And I will tell about after that We Play Ventures structure, because there are so many things. Yeah.
Hi everyone, my name is Roman. I'm a monetization consultant at Google. I cover Central and Eastern Europe and Turkey. Prior to that, I was on the venture capital side, investing in the companies from gaming and apps, entertainment area. So nice to see all the survivors today.
Let's see if we can finish them off. Right, so let's start off with the sort of like the big picture stuff in terms of, obviously it's been a fairly sort of tumultuous couple of years in gaming. It's very different to the heady days of 2021, early 22. What is everyone seeing in terms of, there's going to be some obvious answers here, so we can talk about the obvious, but slightly the, under the off the radar stuff as well, if you're seeing anything. Like, what are the big trends you're seeing in terms of where the money is going, and what sort of ticket sizes into new gaming projects? Let's start there, and then we can drill down into different models and so on.
Yeah, I could start with, if no one minds, with my observation on the gaming, because I see the partners who are working with us raising some funds, struggling a bit during the last 2 years. Post-COVID era is over. Everyone is, let's say, struggling fundraising in terms of the funds. Even VCs are struggling. So despite the fact they're still sitting on lots of dry powder and there's lots of capital on the market, VCs are more cautious investing in the startups right now, because everyone sees the markets are volatile and everyone is trying to focus their investments on the companies which are going to break even soon, and much sooner than it used to be. Later and going forward, I believe it will be still a trend, but still, as of now, those companies which struggle to show unit economics early, even like at seed stage, which wasn't the case before, those companies struggle to fundraise. So funds are still there. Seed, Series A, pre-seed companies still receive money, but those companies which struggle to show some promise of being profitable pretty soon, they struggle a lot. In terms of the deal sizes, later stage deals are, I believe, in gaming are shrinking a bit. Earlier stage deals are staying more or less the same in terms of valuation. Valuation is growing a bit because of the costs that those early stage companies have. They haven't built scale economies yet, but their costs are relatively high. That's why they need much more capital at the early stage to fundraise. But keeping the same, let's say, keeping the same stake for the founders, and that influences the valuations, I would say, on seed, pre-seed stages.
Yeah, I think one of the things that I perceived, and I don't claim it's the total truth, just a couple of weeks ago at GDC, was that mobile is getting a bit more tricky to get money for. The whole user acquisition area is not getting easier. A lot of the companies, a lot of the startups, 2-3 years ago, they didn't really care that much about it. Everybody knew how to do it, and that's how it works. That's not the case anymore. So I think investors are a bit more wary of that and want to see that you understand what you, how you're going to bring these users in. A bunch of traditional mobile publishers I've seen actually now looking for PC and console content. I don't know if that's directly correlated. It might be. So it looks like everybody is kind of, a lot of people are actually opening up to multi-platform, and that was definitely something that that was pretty clear in San Francisco. Yeah.
Yeah, I mean, for those markets, they're obviously adjacent, but people are so weary of the whole kind of UA treadmill. Whereas if you go to PC and console, the way you acquire users, the money that people are actually prepared to pay for those, I think people find it a little bit refreshing that you can build a very nice business from that. So in a way that so much of it was all about mobile for the last 8 years or whatever, we definitely see a load of people looking more at kind of PC console, just because it's a little bit refreshing in terms of the overall market.
Yeah, and I mean, technologically, it's not a big deal anymore nowadays. If you use whatever of the platforms that's not with a U, you can easily port things over. It's not that big of a deal anymore. There's plenty of service companies out there that even do that for you if you don't want to do it yourself for a reasonable price. And you utilize your IP across more people, more potential customers, right? It makes sense to me.
Yeah, certainly. There's an increased risk aversion with investors where they're looking at alternative platforms and alternative revenue sources, which is the same with the game developers. They're currently looking at different publishers, different investors, different ways that they can raise money, sometimes without even diluting their shares, and that is something where we can help as well.
Also, we are so hopeful for, especially in Turkey ecosystem. Yeah, in the past, it was very easier for investment. If you have a good team, even idea, you can take an investment. But after 2022, it will be everything change. The hyper casual already dead, and the metrics more important even became. But many, I think, is the Turkey ecosystem that changed the trends. We want to build in the other categories, not just mobile, and maybe PC, maybe the console, AR, VR. Especially, I'm so hopeful the Web3 and blockchain-based games. Yeah, we will see.
I would like to argue with you about hyper-casual being dead.
No, we are not investor hyper-casual anymore.
Yeah, I think there's a huge amount of players at the moment. Everyone jumped on the ship of hyper-casual and it has been saturated, but there is still a big pie of mobile games there, even though we see an increasing trend in hybrid and casual. But hyper-casual is not that. You know, you can still work and make it work. Yeah.
Yeah, of course, the hyper-casual always live in the globally, but the big companies, they put on the main points. But you are in the studios, I think you are not changed for hyper-casual. You need to work on with publisher. You can take investment very hard. And I don't know, especially I have an idea, mobile. Maybe can be change the other things, especially PC and AR, VR. I don't know, we can discuss.
No, certainly I agree there. I think it has been mostly ad-based in the past, and that's where we're seeing decline in revenue. But also in terms of the product, there are also alternative revenue sources, so developers can look into those. And yeah, there's still a future there. Yeah.
I wonder, is there going to be a renaissance of hyper-casual with the new shops that potentially open up with Apple and Google being more open now, forcibly so?
There will be a renaissance in terms of quality, I think, because in the past, a lot of hyper-casuals came out and they were not up to the quality of the standards that the players are expecting because they're used to playing casual and mid-core for a long time. And once everyone jumped on and started creating hyper-casual, the market became saturated. We increasingly saw a lot of low-quality games. And I think it's going to improve as it matures and developers come up with innovative ways to create new hyper-casual experiences and as well as increasing the quality of their games.
Yeah, I heard somebody label that crappy casual. So.
I wanted to chime in the renaissance of hyper-casual. I don't see that that happening in the nearest future in the way that we got used to it. So I see a concept of hyper-casual as the gates into the gaming world for the people who are naturally not gamers. So, and as of now, the penetration of the mobile gaming market at such a big level that all of the non-gamers who we were able to convert into the gamers, they are already there. And using hyper-casual as the gates, it doesn't make any sense anymore because these people are already into the gaming. Why I think it was a gate for those non-gamers because making attractive creatives, very touchy, converting those users into the gamers from just simple creatives was the point. That then, as of now, it doesn't work anymore in the same way because of the fact that they are already there. There is no one else to convert into this mobile gaming world. And the nature of this hyper-casual game might change, where these hyper-casual games will become just very nice games, but very small games.
It always felt like hyper-casual was a good on-ramp into, for the masses, right? Both for studios and for players, and now everyone's kind of matured. I mean, find me a hyper-casual developer doesn't aspire to build something with a longer duration or longer term franchise, right? These days. So I wanted to ask something around, in terms of where the money is going, because I'm sure some of the guys in here are going to be, thinking about what's investable, what's not. So content versus infrastructure, right? So I've been doing this for a very, very long time. 2014 was when we launched Pollen. And in the early days, the mantra was always, well, VCs don't invest in games because games is a hits business, right? A bit like VCs don't invest in independent music artists, right? Because it's very hits driven. And there were only two that I really remember, which was LVP and Initial Capital, that put their heads above the parapet and said, yeah, we invest in games. And they did phenomenally well out of some of those as well. And then come 2018, 2019, obviously some big exits are happening, and like moths to the flame, everyone wants to get into gaming and so on. So, and then it felt like in 2019, 2020, 21, you know, anyone with good gaming ideas could get those ideas funded if it was, you know, whatever it was. So lots of money went into gaming content, and it feels like we've sort of pulled back a bit from them. So any thoughts in terms of, we'll talk about how content plays get funded in a second, but just in terms of that sort of like that herd mentality of thinking, we don't invest in content because content's a hits business, or you know, what are the lessons learned over the last few years?
Well, that's a big question, actually. It's a good one. So I'm old school. My mantra is still the same. And anybody I met here from the startups, I still said, we invest in companies, not necessarily into a product. But what we know now, and that's exactly what you said, is that we know that a company can become very, very big and very, very valuable with just one product that lives for a decade and longer, right? There's a bunch of good examples out there. So this is not exclusive of each other, but I think it's still really, really important. You might have a great product idea, an amazing prototype. Maybe you already have a little bit of data, you tested it out. But if all the rest doesn't gel and doesn't fit with an amazing team, founders that know what they're doing, that have the conviction and the passion to go it all the way, then product is nice, but I can't invest into it. So that's my answer.
Yeah, I could add up that they're not exclusive, like they go alongside each other. I could provide an analogy from the other venture capital segments. So direct-to-consumer brands are booming today. They are, let's say, alternative to, not to infrastructure, right? But they are actually the opposite of infrastructure. They are not institutional. They are purely the brands, right? So D2C is booming, and the content that they make is basically their strategic resource that they have. So I believe it's same in the gaming. It might be the case that having a very nice content would be your driver without having a great infrastructure. But it's not necessarily mean if you have great content but zero infrastructure that it would work. From the other side, if you have a great infrastructure, zero content, it might also not work. It might work, it might not. So having both together, being placed in a very good way, and having those two buckets, those two strategic assets would be a great thing to do. Of course, you cannot be well positioned in all of the areas, right? You have one base, but always you can partner with someone. You could complement your skill set. Your team could complement your skill set. You might acquire something from the industry if you're big enough. If you're small enough, you can partner with someone who could complement your strategic capabilities with complementary capabilities.
Emre, what's your view in terms of investing in pure content plays or gaming infrastructure, the more pots and pans businesses? What do you, for Emre, WePlay, what's your focus?
Actually, I think I agree with Roman, because the most important thing for us, the team structure. If you have a good team structure, because maybe even everything goes to bad, you can make the game, but the game is very unsuccessful. It can be, but if you have maybe trend, it can be changed. But if you have a good team structure, if you hire the talented people, you can change the plan. Already we searched if we invest anyone the studios, gaming studios, we need to search firstly experience with the team structure. At least 8%, and very correctly put on the team. But this is also just team structure part. Of course, we search to another things. For example, the most important thing, monthly active users, because it represents product market fit, and monetization strategies, also engagement and the community. The most important thing consider.
Yeah, for us it's a bit different because we don't invest in companies, we are buying products. So for us it doesn't really matter how the team is working, it might not be working, and perhaps that's one of the reasons you want to sell your game or app. So the main thing for us is the data. Basically we're looking at the KPIs and we want to see that it's possible that there's a hyper-casual game, for example, can turn into a hybrid game that can turn into an evergreen game, which is the ultimate goal for many companies and many investors who are looking at games, that eventually that their products and their assets become more valuable over time.
So, and definitely one of the things we've seen is we get approaches all the time. So it's harder to get game projects funded than it was, for sure. So, but that doesn't stop new games getting made, right? People just have to be a little bit more creative, right? And people got into that sort of, you know, Pavlov's dog mentality of just like, hey, I go and hit the button, I raise VC money, it's easy, I just keep doing it and all the rest of it. And, you know, loads of people raise a load of money. It's very different now. So that's not to say people are going to stop making games. So let's talk for a few minutes about, you know, some of the alternative models, right? So it's just like, hey, I go to, you know, big VC and try to raise $3-4 million seed for my idea. He says no, or she says no. What do I do next, right? And there's a few different kind of models emerging. So and put yourself in the shoes of one of those guys now. Where do you go? If it's like if the easy, just here's a bunch of money, go build the game route is closed, what avenues are open or opening up? And I've got a few ideas if we get stuck, because we just see some new trends emerging, but I want to see if that sort of resonates across the board.
Well, I for myself, I'm very grateful that not every game is being funded anymore, because there's been a bunch of really bad ones. Let's be honest here, right? It really depends. Answering your question, there's different stages, right? We're at we're engaging very, very early. So basically at idea level, if you have a good one, if it's an experienced team, you don't even have to build something yet for us to be able to get involved. If we're talking about a couple of million, then that's VC territory, right? That's more right up your alley. I think what I'm always most impressed on is if the startup and the founders actually find different ways to bridge their first step that they have to take. And that's anything from family and friends and bootstrapped as the very easy ways to do it. But depending on where you are, and I know there's a bunch of really good programs here in Turkey as well, governments support this now. A lot of them understand that games is a serious business, there is a lot of money to be made, there's economies to be built. And so there's a bunch of avenues pretty much everywhere where you can apply for grants, which you also have to know is usually a full-time job, at least for a little bit, and get free money from governments or, you know, zero-interest loans, all these kind of things. There's a couple of startups that approach us that are very well aware of what an angel actually does and what syndicates do. They did their research. That's also something you can do, because usually at that level, angels are very, very much more open to taking risks and bets than you know, a fund or a VC, because they're obviously dealing in bigger games, in bigger bets, and have a different risk profile that they're looking for. So I think these are a couple of them that come to mind right away.
Yeah, sure. I can add to that. when you think about raising money, most people will look at the easiest way to go into VCs or governments. But as an entrepreneur, you have to think of alternative ways as well. And there are many markets emerging where you can sell assets. Let's say you're a 3D designer, you can create assets and sell those as bundles. If you're a programmer, you can sell code, game templates, or you can do this as a studio and sell a whole game, basically, not just to companies like ours, but there are also marketplaces where you can sell your apps, whether they're working or not. So,
I would add to that, venture builders, they are a thing right now. I don't have the stats like how many companies fundraised from venture builders, because it's mostly the whole VC market is private, but venture builders, they are even more private, let's say. They do not disclose much, they do not share much, how much of the stake they take, how much they invest, but they work in the following way. Mostly all of the venture builders, they are entrepreneurs themselves. They have like a cash cow, which works pretty well, and then they are happy to reinvest in the brilliant ideas. You come to them with the brilliant idea, they have the capital, they have some resources besides the capital, knowledge, know-how, user acquisition team, engineering infrastructure, other things that could complement your idea. They take a huge cut from your equity, but they make your idea, the probability of your success, of the successful product launch much higher in exchange of that bigger cut of the equity. They help you with setting up the company, with infrastructure, getting first users, analyzing those users, with most of the things. Of course, it depends on the venture builder by itself. They help you with the first initial stages, and then you are growing on your own. It's a very nice way to start your first business. I would say going forward, it's maybe getting harder for you to grow the capitalization, because you lose the incentive of building this business, because it's not your business anymore. You are like maybe not even major shareholders in that shareholder in that business. That's why you lose the incentive to keep growing and building that business, and that's why like you might become a profitable company, very nice one, but not necessarily a huge giant with big market capitalization who is fundraising constantly. In my experience in investments, we've had one successful transaction when we invested in the company which went from the venture builder. It was a consumer app, very nice one. Folks were showing a very great product, very promising traction. And they were bought in several months after we invested in them by big company. It was Pinterest who bought them. But they were buying purely the very nice team and great product. They were not buying the profitable company. So in this case, venture builder is a good thing, but not always the best thing. So as soon as you are trying to fundraise, you should think about your ultimate goal going forward.
I think the level of founder experience is important here, right? If you've got 20 years under your belt, it's probably going to be easier for you to, because you've just seen a lot more stuff. If you're like, if you're young and full of dreams and all the rest of it, then de-risking, just the binary thing of VC is like, I think it's wrong to say you should look at all the different options. The venture builder options, definitely interesting. One thing I was going to put out there is that we've seen, because we've been approached, it's not really what we do, but we've been approached about this several times, like 10 times in the last 6 months, is where you've got a VC-backed content company, right? So the VC is essentially invested in the game. And the game is doing, it's okay, but it's never going to be a smash out, right? And there would no way that game would ever get invested in today. So let's say the game is making, I don't know, maybe 50 or 100,000 a month. So even not nothing, but it's never going to be $1 billion game, right? And the founders are sort of there, sort of turfing it out because they think, we're so wedded to this game and we've got to see it through. The VCs are sort of like saying, oh shit, how are we going to get out of this? How are we going to get any kind of return? And there are obviously people, and Ilker, you can talk about this more. You can look at through the different ends of the same barrel or whatever. So on one hand, you're saying, hey, I've got this cash flow, it's making 50, 100K of fairly organic revenue, and the team is kind of, we can operate this in a tick over team. and we're trying to figure out how to pivot or get out the hole or create something new. But then there's someone who can look at that stream of cash flows and an asset that you can take something and do something with, and maybe the thing to do is to say, right, I'm going to sell this for, I don't know, is it 1 year, 2 years, 3 years, whatever the number is, right? I'm going to sell this for, sell the IP for an amount of money that's essentially analogous to raising a small venture round. And that way you get, let's say, pick a number, right? It's $1 million or $2 million, whatever it might be. You sell the game that someone else values higher than you. You have effectively a mini round that you've just raised to take all of that knowledge and learning, double down and go and build something else. VC doesn't take any dilution. Company gets a sort of an exit of sorts and then gets another bite of the cherry. So we've seen loads of people interested in that model because sometimes people look to debt finance the acquisition if it's got stable cash flows. So I wanted to throw that out there. You're nodding at that one.
Yeah, definitely. There's at the point where you don't want to dilute your shares anymore, or what we see more often is project fatigue. So they've been working on this game for, let's say, a couple of years now, and they can't take it any further. They have a different vision with the VCs that have already invested in the game, and they just want to do an exit. So that's where we come in here.
Yeah, so you're never going to get there. You've kind of lost faith in it, but you feel out of a sense of duty. It's like, oh, I raised this money and I've got to keep doing it every day. But if you stop and pause and you look to the side, what are other options? There are for sure other options out there because other people will value the stability of those cash flows and maybe look at it a different way. Maybe you can like turbocharge live ops and put in common infrastructure and all of these different things. So there's, if you find yourself in that spot, there's probably someone that's going to look at that in a slightly different way that may offer you a path out.
Yeah, there's certainly a lot of we're getting is, for example, a group of a team of in the company. They just have been working on mobile games, for example, and keeping a mobile game online and keeping it profitable requires a lot of resources. You would have to update it constantly, add content, and let's say you have a different strategy, you want to do something new, you can sell your games and then go on make PC games. Or we're also seeing, for example, a lot of times these companies develop IPs and they can take these IPs and they can go into, for example, Fortnite or Roblox, and they can create experiences there using their IPs and find other alternatives where they would like to explore, basically.
Yeah, I think you just got to be a bit more creative and not just think it's like VC or nothing, right? So people definitely got into that a little bit. So, so loads of people are, gaming industry's sort of been in a contracting mode. Lots of people lost jobs, et cetera, et cetera. You can either look at that as a terrible, thing, or you can look at it as an opportunity. So, a question for everyone here is like, let's say you've just lost your job. You maybe have a severance payout, whatever, for a few months, whatever it is. Is now a good time to start your own company?
Yes.
If yes, why?
So yeah, on the individual level, obviously these tens of thousands of people being laid off, not cool. Sometimes I'm wondering, is it necessary? But that's not for me to judge. But on the other hand, I'm super excited because there's not just new people being laid off. There's actually divisions being closed, teams being laid off that have a ton of experience. And these are the opportunities that I really, really like, because if somebody makes games since 10 or 20 years and they finally are ready to take the plunge and do their own thing, there's a pretty good chance that they still know how to do it and they're going to succeed. So from that perspective, I'm pumped. I'm doing a lot of meetings.
You've got to try and draw the positive from the negative, right?
Yeah.
And maybe it's just the push you needed over the edge to...
Maybe. Sometimes that's exactly what happens. So I think it's an exciting time as investors on every level, from the friendly neighborhood angel all the way to the big big mean VCs, because there's going to be some really cool startups and game companies coming up over the next 12 or so months. I really believe that.
Yeah, I could add to that. During my last 2 years, all of my partners, do you know what they complain about? Like, during those 2 years, every month they ask why CPMs are decreasing and the cost per installs are increasing. This is like literally 2 years, 3 years before I was investing, people are complaining about that. And it will be staying the same, why CPMs are low, CPIs are high. So there will be no better time than today, because the fact that it will be always something which might prevent you from entering the field, right? But if you have a brilliant idea, you can start working on it right now. It doesn't hurt you. The issue is, like, of course, if you don't have enough capital, you don't have resources or something like that, that might prevent you from building. But if you can do it by yourself and you're more or less self-sufficient, or you are a group of people who are sufficient to start a company, and you have a complementary set of skills which could help you to build the company, of course, it's never, it would be never the best time to start than today. The other thing, I think yesterday or 2 days before, A16Z announced that they fundraised like 7 billion fund. 1 billion out of that is going to gaming, 1 billion something into entertainment apps. It's a promising sign. Of course, they do not commit that they will allocate all of that billion like straight away in all of the companies in the world, but still, like, they show something that there is something promising going forward. The other thing is, I don't remember the article, and there should be some statistics. If you will Google it, you will find it. So companies which are built during the crisis times, they are more resilient, and sometimes they bring better returns, not sometimes, but statistically they bring better returns afterwards. So if you are building your company during the crisis time and you survived it, and you showed some promises, you are doing well, then you will be resilient to, during the better times, you will be even better. So, I mean, if you are thinking about doing something fundraising, do it now, do it today, probably.
Yes, and let us know.
Yeah, I totally agree with that. The industry has become more competitive, and competition breeds innovation. So if you have any ideas, this is the perfect time to try and implement them. If you can do it on your own, that's the best, of course. And the good idea is to think that when others are fearful, you have to be brave. And no time better than today.
Disclaimer, we do not promise that you will succeed. You might start, you might fail, but that's also will be a learning.
Yeah, but failure is not a bad thing, you know, that's how you learn if you're new to the industry. But also that's where you see experienced entrepreneurs and developers shine, because they can combine different ideas, they can combine different genres and come up with something new that's take in the game industry to the next level, basically. So,
folks from WePlay fund, they raised the fund, so they have some capital.
Of course. Even COVID-19 crisis, we continue to invest. Never we don't scare to invest money, but but we are in emerging markets. You know, the money is always very small, and we need to share the very be careful, because we are responsible. Sometimes the game studios forget these things. We have a LP, and we need to choose very be careful when we invest the money. But never, I think, never come to good time. If you have an idea, if you have a good time, and you can you can find the true co-founder, you can start. Because especially I want to consider the one things, we always comes to just technical part, especially game studios just consider the technical part and forget the business part. Because why? That's why we last year we established the We Play Hub acceleration program. Because so many studios, especially in Turkey, not ready for the investment process. Very different thing, and mostly studios don't know how about prepare the pitch deck, how about to prepare the financial documents, DD documents, blah blah. Just put on the pitch deck the game, about the game story. But we are not investing your game. We are investing your company. You need to know. Yeah.
I think one thing that's clear as well, you can do a lot with a little. Right, so let's not forget that we effectively, so you go back through history, economies are cyclical, and generally it's a 7-year cycle. We just happened to miss one around, 2015, something like that, because of everyone figured out they could just keep printing money, right? But I'm, been around long enough to remember a few different economic cycles, and it's just the same thing always happens. You get this huge exuberance about, and you see people like all over Silicon Valley just driving up and down Sand Hill Road in yellow Mustangs with the greatest new thing and trying to raise crazy amounts of money for shit that's really ill-baked and not well thought through, and there's a herd mentality. And, of course, if, you saw people say, oh, I'm going to raise $10 million seed rounds and all the rest of it. Like, you could probably, if you were really sanguine about it, you could probably do it on 1/10 of it, right? So I think, expectations about what people raise to do what and all the swagger has gone. It's a little bit more like, okay, I'm going to raise a small amount of money, or a much smaller amount of money, because maybe it's all I can raise or make on the side, create something, and then show a demonstrable path to profitability, right? Now, that said, all the money is going in, as someone said earlier on, there's obviously a shitload of money going into AI, and all the VCs are chasing the latest, greatest thing. So, which brings me neatly onto the topic, of course, that we can't not talk about, because it'd be remiss of us, in terms of AI in gaming, right? So obviously everyone's talking about AI left, right, and center, but right from an investment point of view, again, what's the first thing that's sort of going to become more prevalent? Is it AI in, is it asset generation, the building blocks of the game? Is it using AI to sort of dynamically figure out pricing on the go? Is it AI in user acquisition? What's the first thing to pop, do you think, and become sort of mainstream?
All of it. All of these are good examples, I think. And the first criteria for us is it actually real AI? Because there's been so many pitches that are labeled. I'm not kidding. This is like really the case. There's so much stuff that's labeled AI, which is actually not. So that's a good criteria to kind of dig a little bit into that. We are invested in a company that actually employs AI to help developers make quicker assets quicker and better, and actually IP protected, which is really important. How a AI startup looks at IP, intellectual property, is something that's really important for us as well, because this is a total minefield that might unravel or not whenever regulatory bodies actually look at it, or the first couple of cases goes through the courts. So that's important. But other than that, it is, to generalize it in a really simple way, AI employed in making games and getting games to market and getting them in the hands of players, that's a phenomenal thing. I love it. It makes things quicker, easier, and just more efficient, and that at the end of the day means bigger profits, hopefully.
Yeah, I would like to add on to that. AI is not just hype, People are using AI to prepare for their meetings to VCs, but as well as creating the game where they're creating assets. And we're seeing right now teams of 2 coming up with a game prototype that would take a team of 5 or 10 to come up in 1 week. And they're doing this highly polished and ready to test games in 1 day, for example. And we're going to see a lot of that, a lot more of prompt engineers. So it's all going to come down to not just that your company or you are creating the AI, but also how you use the AI. So you can see these as tools that you can utilize and utilize it to the maximum potential.
Cannot agree more. AI is such a buzzword these days, but and always people confuse AI with ML. They do not distinguish what's the difference, and yeah, that's a buzzword. But when people build something and they explain, we are so successful because we utilize this kind of ML tools, which are our enablers to make things faster, better, more profitable. This is a very nice thing to see, because saying like, we are AI first company or doing something AI, blah, blah, blah, it doesn't help. I mean, those folks who are just making AI as the cornerstone of their company, I'm not sure like whether it would work out in a long run, but those folks who say, okay, there are such a brilliant ML tools which could optimize something in my company, which could make myself or my company better in this and that way, and they say, look, we utilize these internal tools in ML, this one is our supplier in ML team, or let's say AI team, then those folks will be successful because they will utilize top-notch products from the market, they will develop them themselves. But just saying AI all around, it doesn't work.
There are absolutely a bunch of pitch decks floating around out there that were stuff that hasn't been getting funded, where the founders sit and hunker down and say, right, how can we dream up an AI angle to this company that's not getting funded?
Yeah, sure.
And that is where it separates smart money from old money, right? Where you can see a project and go, okay, is this really based on AI, or are they just using buzzwords to get a higher valuation, basically? Yeah,
totally. And there's absolutely a herd mentality around. If you look at the number of like hardcore investors who were invested in gaming because they'd been in the industry, they understood it, all the rest of it. And then you look at the number of generalist investors saying, we need a story in gaming. Gaming's blowing up. We want a piece of it, right? So there's a real, and obviously some of those guys are pulling back and so on. And that's exactly the same with AI, right? There are a few people like, it's interesting. My wife writes pitch decks for startups, so she's a very good barometer of what's kind of hot or not. So Crypto Spring is all good again. 90% of what she's doing is all AI, but just that you can see some of the investors that are funding them, some of the stuff that happens. There are people that are dressing it up and trying to create an AI angle, and there are people who deeply understand the technologies and have got ways around it and are really trying to sort of evolve it. So it's just that herd mentality of investors. You want to pile in when the thing is hot and it's blowing up and all the rest of it. You don't want to have FOMO, right? But I think whether it's understanding of gaming as a sector, understanding of AI as a technology, knowing the difference between AI and ML, for example, and just like a pitch deck makeover, whatever, is really important. Are we done on the AI thing then? Let's just not make it all about it.
Not, right? I don't know.
Yeah, I think that's what happened with Web3 as well. It became a huge buzzword for a long time. And of course, as usual, Bitcoin is a roller coaster. It goes down, it goes up. But at the end of the day, your product has to be valuable to players. Your product has to have value for investors and to yourself, of course. You cannot just fill it with buzzwords and expect it to work in the long term.
Please no AI for the sake of AI. Just if it helps you in some way. I love Gemini. It optimizes my life, like writing emails, doing lots of docs, doing lots of administrative stuff. It's gorgeous. But today it's just like, it's like using, I don't know, Google Sheets or Google Docs. You cannot avoid not using that. It's just your routine. You cannot brag and buzz that you are using it. Everyone uses.
I'm recording this right now, and by the 5 seconds after we finish, I'll have a transcript and then highlights from Otter.
Yeah.
Fantastic.
Yeah, just if you use AI, I'm using language models a lot to write text, write emails, all this kind of stuff. Just do me a favor, don't copy paste it right straight from ChatGPT, because the color of the text is gray, and if I get an email with that, I know what you did.
But you never forget when someone uses ChatGPT for the first time, right? So 2 nights ago in the Hilton, I'm sitting there, only guy in the bar, chatting to the barman, and he's like, yeah, I keep inventing all these, cocktail ideas. And he had a whole screeds of them all written out, or rest of it. It's like, I don't know what to call it. I went, let's ask ChatGPT. And the Bosphorus sunrise was born.
Nice.
based on the set of ingredients. Right, let's fast forward to out the other end. In terms of, so deals are still getting done, early stage deals are still getting done, good ideas are good ideas, people find ways to get things done. I would not want to be the gaming company trying to raise a 30 million Series B or anything right now. These deals are really kind of not getting done. Fast forward out the other end, deals are still getting done in terms of acquisition, right? So there's a much sort of choppier market around, the big roll-up plays have had their issues and stuff, but deals are still getting done. So what do you think acquirers are looking for now versus a couple of years ago?
That's a really good question.
I think they are looking. It used to be they were looking for growth. Now they are looking for profits once again. Like company growing organically for the biggest corporations is getting harder and harder. Generating more profitable businesses, like small companies, small products internally, is getting harder and harder. That's why we see lots of acquisitions. Industry tend to consolidate. Biggest players are buying smaller players, and that's fine. It used to be the case that everyone was trying to show growth, and to public markets, growth was very important, but now profitability is the king. Like cash is the king. If those companies who acquire smaller companies are not looking for profitability, I don't know whether their strategy is the right one. So once again, they're searching for profitability versus growth as it used to be.
Yeah, I think that's totally right. Nobody's going to just ingest 500 or 1,000 people for the sake of it to have them, right? That's a good thing. I didn't understand that model from the beginning, and maybe that's just me. But it's obviously not working out for quite a couple of bigger ones. Yes, if you have a great bottom line, if you have a product that actually turns a nice amount of profit, adding that to your bottom line if you're already big, I think that's a worthy acquisition, right? And that's the big deals from the past, like a Supercell or any of those. If you are at a certain level with your profits, then you're always a target, I think.
One of the things that always struck me, and this is like looking at it through a public lens or a private lens, and seeing tons of companies, some that we actually helped with debt in terms of scaling. So you can look at it in a two-dimensional viewpoint. You can say, oh, the company's got this top-line revenue and this amount of profit, therefore I'm going to value them at this, but not really understanding what was going into that profit, right? And even that top line. So sometimes we would see companies like massively ramp up user acquisition because there was a top-line revenue that they were going to be selling off or whatever, knowing that it was deeply unprofitable, and they, but the guys were looking through a two-dimensional lens, not through 3D, understanding cohorts and what inertia was left in the flywheel to actually value. Because I always think of it as a simple question. If you stop user acquisition, all UA today, what's the area left under the curve, right? What's the inertia left in the flywheel? So sometimes, sometimes we see companies where they have a duration, we think of like a half-life or whatever, that's in, days, maybe a few months, right? And then sometimes you see, like particularly on subscription apps and so on, things that just keep paying and paying year after year. So one interesting metric is to say, well, what of the company's last 12 months, what percentage of those revenues were made from cohorts that were acquired more than 12 months ago? Yeah. So you get some kind of measure, and certainly public market investors were just not doing that, and a lot of acquirers were just looking through a 2D rather than 3D lens, and frankly have been, paid the price.
Yeah, weirdly enough, because I mean the intelligence was already there, right? It's all science now. It's all math, especially on mobile, right? There's nothing else. It's all algorithms and numbers that you can look into. But yeah, I mean, once the frenzy starts, the sharks are feeding, right? I guess.
Cool, right, just conscious of time, we have a few minutes left to go. Maybe we just like throw it open for anyone, for the survivors. If there's any whilst we've got these guys here, if there's any questions anyone wanted to pose.
Or something you totally disagree with.
Or heckle, indeed.
Hi guys, can you hear me? Okay, I have a question to Roman. Google AdMob recently unveiled their in-game banners, sort of new type of in-game ad.
Sorry, could you speak a bit more louder because I
Yes,
can't.
can you hear me now? Yeah. So Google AdMob recently unveiled their in-game ad formats, new ad formats. What are the strategies there? Like how you want to implement them in games, and what kind of what's your plan with this? Because this is a new style of ad format, so I want your take on it.
Yeah. So you are talking about immersive ads, right? So it's definitely a big thing for monetization as of now, and our product team works very hard to deliver that product on the market. I truly believe it will be one of the best things which is going on in monetization market. I believe it should have been communicated just recently that we are planning to launch some public beta versions till the end of this year. So the strategy is just to release this great format on the market, utilize it as much as possible so everyone would get the access to that format via AdMob, and yeah. This is the strategy.
And what kind of targeting opportunities would this present to advertisers?
I mean, it will just give non-intrusive format to the market. The market is struggling with the formats that we have as of now, like lots of interstitials, lots of rewarded ads, which are, let's say, not very UI UX friendly for the users. Users are not happy about those formats. So having this kind of a new innovation on the market would be a great thing to see. And yeah, the impact on the market would be giving more flexibility for mobile games and mobile publishers to diversify their the way they monetize themselves.
Yeah, also you cannot improve what you don't measure. So make sure you have custom events on all of your ad networks and ad placements so that you can improve them.
Cool. 1 minute. One final question.
People are tired.
Very
the
conscious,
last
right.
panel of
Okay, in that case, I think we should wrap up, and please say a big thank you for all of our panelists.
Thanks, man.
Cool, so I think it's time to pass the mic back. I think Eugene was going to do a wrap at the end.